Hello, ladies and gentlemen. Pleasure being you here. And after a long time, week or two that we haven't recorded any podcast, we're super grateful to come back here to our show, the Trade Pod. So today we're super excited because the video, yes, our guest today is a really interesting guy. Like he's being involved with the financial markets for most of his grown years, and his last experience and his current experience is with actually futures, one of the greatest and the most valuable trading desks in Europe. So it's a pleasure having you here, David. Thank you for participating within our show, the Trade Pod. How are you today?
Thank you, Afek. The pleasure is mine. I'm great. I'm great. Thank you for calling me. This is the first time
Yeah.
I get an interview, so I'm quite excited.
So I'm grateful for being your first one. There is a sentence that you always have your first time. So if us is your first time, so I'm super happy about it. So yeah, so before we'll go and dive deep into your career and milestones, let us know who you are, because I know who you are, but I bet the rest of the people do not. So introduce yourself.
So I live in France, in my hometown Toulouse, in south of France. I have a little daughter, 3 years old girl, uh,
Oh.
and I've been doing most of my career uh, in London, in the hedge fund industry and prop trading firm. And now I am working for myself on my own,
Super,
still
super.
on the financial market, obviously.
Yeah, incredible. So, um, I'm like, let's focus on your past experience. So your past experiences with extra futures. Me and Alan would really appreciate this place as an educational place, and as a place that, congregates some incredibly good traders from all around the world, and teach them how to trade, and teach them how to read the charts, and teach them how to be a macro trader, and specifically this is what you're doing. So please tell the audience a little bit more about what you have done over your 9 years with Extra Futures, and what was your
Uh,
passion.
Actually, we started all together in Futex, and the owner of Axia order trader from Futex, and they built Axia together. And I was lucky enough to be in the early stage of the adventure. Uh, it was an amazing time and really rewarding time being around those traders who are all my friends now. We are such a great community. And yes, I spent many years with them on the trading floor in London, learning a lot, being with such exceptional day trader was maybe the most exciting time of my life. I miss it every
Really?
single day.
Really? Why
And
so?
pardon,
Why so? Like, why
it's
being
not just
why
living,
congregating with elite traders
but
was one of the most exciting adventures of your lifetime.
we were all very hardcore about the job, all passionate guys. Uh, so it was an emulation of sharing ideas, uh, of competition. Uh, some of those boys are really, really hardcore. And that's a great emulation that everyone is going in the same direction, trying to be as good as they can be, but sharing a lot. It was not a lonely experience. This job is really lonely most of the time, but yes, it was a fantastic team, and yeah, I love them, and I send them my best regards if they listen to me, guys.
Awesome, because out of what we have experienced from traders around the world, they all commit that the manual, the discretionary workflow of a trader is like super lonely and super boring because 99 or 92 or 93, that depends on the trader. He just looking at the graph, he's just looking at price action, he's just trying to analyze what's going to be the next move. And over time, of course the trader evolves himself, but over time, it's really boring. So I think that congregating with more and more people over time, and more people that comes along with your specialty, I think it is contributing to your understanding as a trader. So I'd like to ask you, like, if you have you were one of the first people to join the adventure of exit futures, and you worked alongside with your friends in the trading floor, and right now you're trading independently. So I would like to ask you, over time, what was the most impactful lessons that you have learned over time that really impacts the way you trade today?
Um, I think the most valuable thing was to follow uh, what interests me the most, because I was lucky enough to be around many different kind of trader and trading strategies on many different time frames. So I had the time to build my own vision, my own process, my own path in order to navigate the financial market, but something that was custom built for me. I didn't.
Mhm.
On the early stage of my career, I tried to emulate most of my mentors, and that was not the best play. But I mean, you need to start somewhere. Huh? But the fact to learn different strategy on all different time frame allows me to have a holistic view of financial markets. Of course, imperfect. It's never perfect because it's a forever evolving game. So, but I have a holistic view of the forces engaged in the market. So the, for me, that was the greatest point to catch, to grab this holistic view. So some of the traders doesn't need to be that global. I mean, they can stick to their gun in a really specific area. But for me, it doesn't work that way. I have to understand what's, of course, you don't understand everything that's going on, huh? But I, I have to understand the main forces.
I have a question.
Mhm.
Um,
Mm-hmm.
how did you grab that holistic view over time?
But first of all, I worked many years as a day trader, future trader. And then I was really interested. I always been interested in global macro analysis. It was more a passion and a hobby than my core business. So I did it at the same time as being a day trader. And I evolved in this way because this is what I like the most, what catch my interest. And so I shifted from day trading to more hedge fund portfolio strategy. Long short portfolio strategy, sometimes using option, but most of the time using edges in order to be market neutral when we are in a transition in the cycle and where we are in a clear-cut directional cycle, going net long or net short. But yes, switching uh, gears between market neutrality and being directional in function of the market cycle or of the economic cycle. So this is where I feel the best. Also, I don't have to be a slave to the to time, because when you are a trader, you are a slave to time. When you are a portfolio manager, time is your friend. But
Wait. I would like to just to stop you here. When you are a trader, let me go yourself and then let's try to break it up. When you are a trader, you are a slave to time, and you when you are a portfolio manager, you are time is your friend. So basically, let's break it down. Please explain what do you mean?
yes,
Because
because
I
when
thought
you
I thought there was a congruence between like being a trader and being a portfolio manager because by the end of the day, you're looking at the charts or you're looking at the news each and every single time. So I thought
um,
about the congruence in that space.
you are going up to the time frame, more this is based on fundamentals, and fundamentals doesn't change overnight.
Mhm.
Sometimes, uh, sometimes there is some black swans, but fundamentals take time to develop themselves. You got the time to execute, to be. You can remain offside quite a long time, 2, 3 weeks, 1 month. It's not a big deal. You have not the same kind of leverage also. So you can sleep at night. But when you are a trader, so short-term participant, you are a slave to volatility. No volatility, no PNL. You need the market to move. When you are a portfolio manager, you don't especially want volatility. It's quite the opposite. And if you watch at volatility in general, uh, a great volatility to trade, let's say a VIX above 22, 25, it's 90% of the time. Sorry, it's 5 to 10% of the time, and 90 to 95% of the time, it's a low vol environment. And low vol environment is the best environment for portfolio managers.
Mhm.
You don't have to touch your position to adjust your edge. You are just letting time proving you right or wrong. Yeah, it's way calmer, way calmer.
I understand. So, you know what? Let's talk about fundamentals because I see that you really have a passion for fundamental. So, you know what? Let's do this. Let's pick a subject or let's pick an asset, all right? And let's try to analyze this asset. Let's try to understand what fundamentals really drives this asset and how and of course, what fundamentals really impact is volatility, and of course, what moves the market in terms of fundamental news. And when you know that like I don't know, the big money is being fearful of like getting inside, and when you know that there is a great time to enter the market. So let's actually diagnose one asset. Just let's try to understand each and every single step. So I will let the traders know how do you construct fundamental understanding that it's enough efficient for assets. We have done the same for crafting an alpha with some great quant traders that came on the pod. And let's do the same for crafting a fundamental understanding over an asset.
Okay, I think the best way to see that is to first things first, talking about the different stage of the process. In order to isolate an asset, you have some step before, crucial steps. Starting really on top-down approach, you world view. So you divide it by the main area of the world: Asia, Europe, North America. So you start to choose those main region of the world in a globally. Then you go back to more geographic area. Inside the geographic area, you go down to sector, subsector. So all of this is a global macro approach. This beginning of top down, general to specific. And then in order to isolate a specific asset, you switch to quantitative and qualitative financial analysis. Then you can isolate pre-sales assets with high potential.
So let's go over, because right now you have mapped out, like, so the first step is actually understanding what do you need to understand in order to start diagnose an asset.
I need, first of all, to understand where we stand in the economic cycle and where we tend to go with good probability. So first of all, I need to know where we
How
are
do you do it?
now. And for
Like, we all know the infographic of the economic cycle. Like, once the entire market is like thriving, and once the market is like crying. All right.
yeah,
So
but
we,
that we
we all
allow
know
you
the
to get one step further. You when you try to isolate where we stand at the moment, of course the market is pricing in this information. But what's the next move and the move after? So you are doing a lot of homework to work on the next move in order to have good price and having time to build up your position. So you doesn't take a decision overnight or because there is a new info going through your Bloomberg. It takes time to take the decision, to build the position, and let the market prove you right or wrong. Am I clear?
How long though? Couple of months, couple of days?
On my time frame, 1 month, I start to have clear view of if I have to pyramid in my position or cut it off. Max. Because the first target is the next quarter. And of course, time going through, you get more information with confirmation or not of your bias, and you adjust. For instance, in order to have a clear view of the probability where we should go, we focus on, let's say, 4 main advanced indicators. This is the lifeblood of hedge fund industry. Actually, this is the credit cycle with a backdrop on building permits, who gives you a lot of information about the credit cycle. PMIs, household confidence, and of course, commodity prices. So all those indicators give you a lot of insight of what's going to happen over the next 3 to 6 months, even on 1 year from now. Because, for instance, when the credit cycle is moving, the impact on the real economy is in average 18 months after. So, or for instance, when the PMI is moving, the impact on the real economy is 3 to 4 months after. This is gold. So we are a learner of PMIs and credit cycle. This is the lifeblood, actually. And that makes a lot of sense. Our economy is based on debt. So if you do it stupid simple, let's say credit contraction, economic slowdown, credit expansion, better growth, with a time lag of 18 months in general. So having this kind of approach and focusing on this kind of advanced indicators allow you to pull the probability in your favor. Of course, after you got to find asymmetrical risk reward trades. That's another subject, but that's not the biggest deal. If you are correct on your economic analysis, you have done a great deal of the job.
I understand. So in terms of when you pick uh like let's change the hats between like the fundamental analyst and to a portfolio manager. When you pick an asset to be traded on your portfolio, which asset it would be, under what fundamental circumstances, and why have you constructed your portfolio in such a way that you eventually believe it will like be incredibly fruitful over time.
Mm. You got to find the diversification, even if if your view is, let's say, completely bullish on economics. You got to find a way to have many different ideas that are really different in terms of risk. In case you are just wrong, you don't want to have a bad positioning for over the next 6 months. So you diversify in function of what's going on right now and what's the high probability for the future. And this is not a single scenario. You can have different paths ahead. For instance, at the moment, I'm looking to build a position on a real estate investment trust rate in the US because they had a bad time, of course, with the hiking cycle, classic. So you can find really interesting rates with really high quality, with really interesting valuation, with fair price or even cheap rates. But as at the moment, as we are entering a new credit cycle where central bank is starting to ease, I know the impact on real estate going to be in 1 year, something like that. So I don't want to be too early in that. So I want to short a rate against my long, because I know I will probably be wrong during 6 to 12 months. So I will first trade the spread between a really bad rate and a really good rate. And when the fundamental will start to show me that I'm right, I will cut the edge. Is that clear? Perfect.
I understand.
So you manage your expectation over time, seeing if you are right or wrong in the correct direction or not, and you give yourself optionality to be nimble and to change your position and to change the character of your portfolio.
I do have a question.
Mm-hmm.
Speaking about position, how do you manage your position while you're in the middle of the trading of the trade itself?
I always start with a basic size, and I want to see some time going through in order to confirm or not my bias. More I have confirmation, more I pyramid into my position. If I see the trade is dead money, not going really nowhere, fundamental are not really proving me right, I start to cut a bit of the position before being stopped out. And I still allow the position to breathe and to prove me right. Maybe I have the timing completely wrong. Or sometimes I can be offside during 3 months. That's not most of the time, but yeah, sometimes I keep the position even if it's dead money at the moment. But as long as I'm not dead wrong and probability are still good for me, I manage my position like that. But yes, I pyramid into my position to get bigger size as long as I have confirmation along the way.
I understand.
And
Now,
I cut my position not because of a price target. I don't have target. I cut my position. I take my profit when the position doesn't make sense anymore. When all the juice has been done. You know what I mean? When clearly the job is done in terms of fundamentals. The market is pricing in what it should have priced. Okay, there is no reason to remain inside this position. I don't cut the position because of a random trading stop loss or something like that. It has to make sense fundamentally.
I understand. So speaking about everything, um, in related to trading, now let's change the hats again and let's see where you have started your career. Um, you was a day trader alongside with your friends in Asia, right?
Yep.
I would like to ask you, what do you think is the most critical tool when you are a day trader? Like DOM, footprints, order flow, MBO data, whatever, heat maps. What do you think is the most important and critical tool to master?
It's to master uh, the market profile with the philosophy behind of two-way auction. So the two-way auction theory, you have to nail it.
Wait, what is the two-action theory? I don't think I mastered the two-action theory. Can you please explain a little bit more about the two-action theory and what
but
it what an action is?
it's a never-ending auction. The market it's a two-way auction. So this is really well represented in the market profiles, and in the volume profiles, in order to understand positioning, knowing where big position are starting to be offside, when guys are starting to be taking profits, where the big stop loss should be. This is the best way to understand positioning, in my mind, is to use the market profile. The footprint is quite difficult to it's quite difficult to aggregate on the footprint the big positions. For me,
What
it's
do you mean?
way clearer on the market profile.
What do you mean? Because like can you please explain what an action is?
Auction is just the action of buying and selling on the book. It's a two-way auction. There is many people buying, many people selling, fighting for prices. The market moving. Some are getting caught offside. They have to puke. Some are adding on their position because they are onside. Yes, this is the typical auction or what is going on in the market. It's a never-ending two-way auction.
I understand. So basically, what do you think the market profile is strong enough? Because I would ask you this: if I would master the market profile as a setting to understand where the markets should go, um, what do you think, like up to your mind, market profile is going to help me with? Because there are so many opening techniques that you can master. There is B, there is P, there are so many others.
Yeah,
And let's
keep it simple. Huh? Positioning, that's the basic. But the market profile won't tell you if the market should go. This is more based on fundamental stuff or news going on what the actual theme on the market. But the market profile will tell you where are the position, the big sizes, and you know that if you go above those prices or below, people are going to get caught.
Hmm. I
When
understand.
you say a massive short position at 10, let's say your price 10, you know when you go above, they're going to be in danger and difficulty, and their pain not going to last forever. At what point? At what point they're going to puke? They're going to go long. All right. So
Hmm.
if fundamentally you want to be long because it makes sense fundamentally, you know that if the market starts to go around 10, it starts to be really interesting for you. Because if we start to go above, you know those big positions going to be offside. So this is a perfect entry point. If you start to be above those guys, because they're going to puke at one point. And there is something really common in the market. We don't have much pain tolerance, even if it's a robot, because the robot, the code is made by a human, and he doesn't want to lose money. So if the massive position start to be out of the money, so you know this is a really critical point, and the market profile is giving you this really beautiful information. This is market profile 101. So
Hmm.
in my mind, this is the best tool. Uh, of course, multi-timeframe charts, but yes, the core business on the technical side gonna be the market profile. But
How do you like look?
technical is just
I would ask you a question. If I'm looking at the market profile, now fix me if I'm wrong by this hypothetical example, but if I will look at the daily chart on the market profile, and then I will go on multi-time frame charts, and I will place 5 minute chart as the lowest time frame,
mhm,
30 minute, and 1 hour. How
mhm.
should I approach this multi-layer analysis once I know or I have an assumption of where the market is going to go according to the data that I have analyzed and diagnosed over the market profile recently. So like I have
You,
a
you're gonna
macro.
you're gonna find weakness. You will see in which prices people are gonna be in trouble. So that's going to be help you a lot for execution, because you have your bias. All right, you know, if the market is starting to go in this region, and there is not a lot of defense on prices, not really absorption, people defending position, you know they're going to be in trouble quickly, and you can be really precise on your execution in a 3-4 ticks. So you can have really limited risk. When you execute at those points, you will see quickly if you are right or wrong.
Mhm.
So if the market is not doing what you were expecting, if you see there is no sign of panic around here, you are probably wrong on your analysis. So you start to lighten your position. At the opposite, if you see the expected activity, okay, people starting to puke big position, boom, double your size, boom, again, boom. As long as you have confirmation, boom, 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 you pyramid your size. So like that, in a really short area, you can build a decent, size according to your risk, obviously. But pyramiding allows you not to destroy your average position, and you know exactly where you are wrong. If the market is not proving you right really quickly in this kind of region, you know that there is something incorrect on your approach.
I
Yeah,
understand.
that allows you to build big position, because you won't make money clipping 10 lots. You want to clip big sizes to build big
Mhm.
position in order to make decent money. So you have to protect a maximum your entry, and and knowing really quickly when you are wrong.
I
Does this
understand.
sense to
So
you?
yeah, but how do you build big orders or big trades within the future market? Because if I enter in point A and I would like to double my answer at point B, which have a distance of 4 points or 5 points, doesn't really matter. My first 4 points will go for point B. Like I will start the trade from that trading from that entry point, and now from my original trading point. So how do you build a big position in the future world?
Yeah, your first clip is in the region you want to execute when you start to see the market going your way, and as long as the market is developing in and confirming your bias, you add on those points when you got confirmation. When there is a small pullback, for instance, not going through your entry with still aggressive activity behind, okay, you know people are behind you. There are people pushing in your direction. So you can add at this point your pyramid in order to having your core position protected, and then you ride until the position makes sense.
Mhm. You know, all right. That was some incredible. The rest of the insights were incredible. So thank you for that. I would like to go for the last for the last part of our podcast over in Hebrew called Molakim. Like it's combat tradition, like what you have been through over your time in the trading floor. So I would like to ask for some memories and good stories um about things that you cannot forget when you were there. Like how it feels to be a trader alongside with young and enthusiastic traders who knows how to trade the market and eventually makes a substantial amount of money each and every single day. And how do you grow? And what story can't you forget over time?
Um, the shouting
Now I see
in
the
the trading floor.
smile. Now I see the
Yes,
smile. I knew how to tackle you.
some broken keyboards. Uh,
Really?
oh yes, of course. I've seen quite a broken keyboard.
Alan, please break your keyboard.
No,
Break it.
that
How
happens.
many
That
times have
happened.
you broke your keyboard?
No, I never did it. I never did it myself. I am quite
Really?
composed and calm. Yes, yes.
When
But
I lost on a FIFA game for my little brother, I broke the DualShock above his head. So I don't know why you haven't broke your keyboard. Like you have no justification to not break your keyboard.
yeah, but no, the best the best souvenir, of course, the big winners. Um, when everything was well executed, um, clear, beautiful, job done. That was a fantastic feeling. Um, Also great souvenir when where we join all together in order to discuss a specific macroeconomic point or geopolitical event, sharing knowledge, sharing thoughts. I miss that a lot because I'm still doing that, but alone for myself and sharing with uh, these really uh, interesting people was great, great souvenir.
Hmm. Tell us a story. Tell us a story that you cannot forget. Like one experience that you can't forget. Like one day I went to the floor and da 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 happened. Share with us one great experience.
Uh, there was many great story. One especially where we've been on holidays all together, and you know it's a really high testosterone environment with uh, sometimes some crazy fuckers around, and we had it was holidays, doing sport and chilling with the guys. And we had a lady coming to teach us how to do some Indian songs. They wanted
Indian
us to
what?
sing. Yes, they wanted us to sing in kind of Hindu or Hinduist stuff. I don't remember exactly. So you see all these 30 stupid 30-year-old male full of testo trying not to laugh. And of course, it was an absolute disaster. The poor lady, it was a shame. She had a really bad time with us. No, that was kind of, this is the kind of story I can tell. There is many story I cannot tell in a podcast.
I understand. I
You can
understand.
imagine.
But I like the environment where, like, man comes men congregates, they really have high testosterone, and like one lady comes in. I love this story. I love the beginning. Never mind. Let's put it aside.
Yeah, no,
So
no, that was fantastic time, but I won't recommend this kind of career for everyone. You got to get a lot of patience and discipline and a real love for the game. If you are just in love with money, well, do something else. There is so many easier way to do money. Um, so you really have to be in love with the fundamentals, uh, learning all the different aspects of the game. There is geopolitics, economy, finance, psychology, your own psychology, and crowd psychology. I mean,
last
this is
question.
really
Last
dense.
question. Last question. I'm sorry for cutting you off. Last question. If I would come to you and I would ask you about a training career, how would you decide if to recommend me over on a trading career or not? Like, I'm telling you, yeah, I love the game. I love I do not know if I have a true love for the game, but how would you
But
go and
are you really interesting about the environment? Are you really interested about what's going on in the world? What the relation of causality between things? Do you try to make sense of what's happening? Uh, do you manage to give up when it doesn't make any sense? And all right, it's just like that. I have a deficit of information. That's not the end of the world. It's always going to be the case, but yeah, it's all a thinking. It's you have to be in love with the thinking process.
I understand, Megan? All
Because
right.
if it is a detective game, you have to accumulate evidence, fact, and non opinions, and making your own way around it.
Incredible. Incredible. So, first of all, I would like to thank you for your participation within the pod. Um, it was a great time speaking to you. I love that experience. So, I really want to show how grateful am I for that conversation. So, thank you very, very much. I enjoyed.
Thank you very much. Affect my pleasure.
I would love if we will be able to schedule another call, but this time you'll be educating us about market profile. If it interests you, I think we
All
would
right.
love to do it in the double auction theory. So let's do it right now. So like let's schedule right now, but until then, I would like to thank you, and I would like to thank you for participating within our show, the Trade Pod. Thank you for being here, mate.
Yeah, take care, my friend. Thank you very much.
Take care.
Ciao,
Bye
ciao.
bye, mate.